Amazon is not the most popular e-commerce stock that people buy now. Things are expanding, things are moving on from 2020. Now we've got 4 stocks which I'm going to be speaking about today. Shopify, Meli, Ltd, and also Etsy, which has blown everybody away during this COVID-19. And starting of September, all the stocks are falling. So in this video, I will be exploring the options of when to rebuy this stock because they're good long-term hold, especially with the momentum that's pushing them onwards in these regional companies around the world. So stick with me and I'll make your time worthwhile. So welcome back to Family Investment. This is Alex Ko. These 4 companies that I mentioned, Shopify, Meli, Etsy, and Ltd, are the most popular stocks available that people are buying for long term. So in this video, I'm going to go briefly on the basic fundamentals and the valuation, and most importantly, Fibonacci retracement tool to see what levels, support levels they have been building up and what floors that we should be considering buying. Ever popular momentum stock called Shopify, a Canadian company startup that opens a platform for companies to join robust system that can build an e-commerce platform on. As you can see on my stock card here, Shopify has high growth potential. Shopify has strong operation, same return as market, and one thing that I would like to tell you guys is Shopify is way overvalued. And with the EPS forecast that's coming up, if I've done my valuation on Graham's calculator here, Shopify is only a $200 stock. But why are people paying 5 times more? Folks are basically forecasting the future of Shopify growing even bigger. But for now, they are overvalued. Now we're going to the Shopify Fibonacci retracement tool and technical analysis just to see where the great buying and support levels are. It's really important to understand where we should be looking at, where the support levels, because that's where the traders, the option market, the folks are buying and selling. At $950 here, you can see there's a huge, very strong support line that was established for the last 2 months. So we will see if it will penetrate through that floor. This is the line that you should be looking if this tech sell-off goes even more aggressive. This boundary here, which I call the second buy, but I call it the boundary 744 to 830, where I see the second, if we break through that floor, that's the support line that we will be in if volatility is growing high. So that's where you should be aiming at. Do not rush in to get at 950. Because if you miss Shopify, there are other areas you can get. But if you're already owning Shopify, and try to average down on the first buy on 950. Everything goes away, this should be our buying point. But if it goes further, we should have another sell-off for a bit lower. So think about how you systematically want to split your money to invest. And the second stock that I would like to speak about, I call it Meli. This South American Mercado Libre Incorporation, and this stock is going at $1,083, over $1,000, similar to Shopify. If you're a value investor, valuation is not even coming close to $100 a share. But folks are paying for the momentum, folks are paying for the future potential. High growth potential on my my stockcard.io. Stable operation, they're still growing, they're still expanding logistically. Imagine what Amazon did the last 10 years. That's where they are going. They're outperforming the market, meaning they're the number 1 e-commerce in South America. And finally, like I said, overvalued stock. So understand the risk before you go investing in Meli. But then you need to be a long-term investor to buy Meli. And as you can see on the Fibonacci chart, which I've plotted from the highest to the lowest, at the moment they have already touching the support line at 110. Support line they're trying to push through, and I can see that people are trying to penetrate through even lower. And if the sell-off goes off next week, if more momentum sell-off, then it will break through very, very easily. I would get in at $100 myself, but I would say we are at a really, really strong support line at 1,100. So you play your cards right, you know your risk, and this is what I'm presenting to you. It's one of the stock that's so overvalued that if anybody wants to liquidate and get cash out for those early investors, this will be a prime target. So volatility will be at risk. And also oppositely, the momentum is strong. of people are investing in the future value of Meli.
This video is a partnership with StockCard.io. I use StockCard on a daily basis for new stocks or existing stocks, and even better, StockCard helps me in my investment where they send me emails on my watch list if technical indicators change. If the RSI or stochastic or momentum change, they will tell me. I check my email, I know, and I can act upon it, make a conscious technical decision. So click on the link below. I use it myself, really useful, and I highly recommend to you guys. So catch you later.
And now for number 3, C Limited. C meaning Southeast Asia. Homegrown in Singapore, and now it's expanding its e-commerce business. So C Limited not just have their own shop, they've got the C Pay, which is similar to the PayPal of Southeast Asia, and also the gaming business. Again, look at the StockCard.io, the chart here, summary chart, fair growth potential. They're still growing, they're still young, and they have the 3 areas of growth. The gaming business is established, their e-commerce is still going up against lots of competition. They're still not number 1, but they're trying to get themselves there. Stable operation, again, they just got their fresh new money in, they're expanding as we go along. As it stands, 144, you're paying for the future value, way overvalued, they're not even making money just now. You have to bear it in mind on why you are investing in C Limited. Okay, the area which I think that it will be a good buy-in is at 120. Around about the 120 mark here. And also the next one at 105. So between that border, there's a huge support. There's a huge area where it's established. It's established because of its earning that's been engraved and the potential growth potential forward. So at the moment, it's quite momentum. It's quite high. If possible, you know, if it was me possible, it's still quite high. You know, if you're already existing owner, you know, there's no harm in taking profit in an SEA and then buying at a cheaper point, because I see it falling, because the earnings hasn't showed really strong momentum yet, because the e-commerce is still establishing. It's the esports and their payment methods is what's pushing. So there's still changes going on. And the last one, number 4, it's Etsy. Yes, Etsy has done really well during this COVID-19. The last earning blew everyone away. It's basically because of face masks. Everybody wants their own customized face mask, handmade, pay a bit more money for more longevity, and that's where they grew. High growth potential, strong operation, same return as market, fair share price. That's what I would like to emphasize on Etsy. Fair share price on Etsy. They are valued 112 and potentially shooting up to 125. My Grimm's calculator with the historical earnings, they are worth at least 130 based on where they are just now. 130, so they're fairly valued. And the fact that Etsy has just joined the S&P 500, they will be rocketing like what happened to Salesforce a couple of weeks ago. They've just jumped over 40%. Like I said earlier in the fundamentals, it's quite fairly valued. You getting in now is great. I think it's an opportunity to buy. It's shown a future sell trigger coming soon. So time to grab Etsy and time to hold. Etsy has a really excellent CEO. I've seen him speak, and he is out there to compete. He is out there to make a difference. He's using the likes of Pinterest as his leverage to beat the other operators like Amazon or eBay using different avenues. Innovation is key for Etsy. It's the one out of the 4 that I like. It may not be the highest growth momentum or potential peak because it's competing against existing competition, but it's, as a value investor myself, Etsy is my favorite. That is me for the 4 companies that I've just spoken about. Please do your own research, and the work that I've done hopefully helps to supplement your research and kickstart on where you can decide on where to go. I would say that e-commerce should be part of anybody's portfolio, because the way we shop is changing. Things are ever going to be changing, how goods to be stored and how goods to be delivered. So e-commerce, you should have at least one e-commerce stock in your portfolio for growth. Make sure you pick the right one. So please like and subscribe, and hope to see you soon next time.
Alright, before I say goodbye, please do like and subscribe on my YouTube channel, follow me on Facebook, and if you want, support me on Patreon as well, so I can produce content like this every single day for you guys, to give you guys value. So please do share this video to help us grow our YouTube channel, yeah? Yeah. Alright guys, 3, 2, 1, bye bye.